It is September 3rd. It's a Thursday, but you're probably going to be watching this on Friday, September 4th. This is, of course, the video log. It takes 30,000 to a million. And today I want to show you how to collect free money on Robinhood. Doesn't that sound good? Of course, there is a catch, but the catch is so small, it's not even worth considering. It's just free money, you know? All right, but first, before I show you this free money that I'm not taking advantage of at this moment, I want to go through the account and show you what's up. I've suffered a $8,000 loss, but you know, when you're so heavily invested into one company, you suffer some of those big losses and gains. Sometimes it's no big deal. Just 8 grand, just a chill 8 grand. It's actually more than that because my high was about 131, and so I'm down about 10 grand in the last couple of days. Just a cool 10 grand, no big deal. So here's the week chart if you're interested. Down about 3,400. The month chart is still positive, $5,000. 3-month chart, $31,000. Is the year chart right here. Okay, so I'm gonna go quickly through the account. If you need to know what each position is exactly, you can always pause the video and take a look at the details. Of course, this is the ticker, strike price, whether it's a put or a call, expiration date of the position, number of contracts, and whether it's a sell or a put. This is the daily activity here on the right. In green means that liability has been erased, and red means that liability has been tacked on. So here it is. These are all the options positions, about 60 contracts or so. I only have one buy, well actually technically 3 now, of Apple. I used to have 4 buys, so this hit would have been larger if I didn't sell that one option contract. And I have my regular Apple position of 283 shares now. I bought 3 shares today, and I have about 17 more to buy. I want to make it into a cool 300 because 300 is a cool number. Logic. Realty Income is one of the few green names today. I have Norwegian Cruise Liners. So basically the safe havens today were the things that were hit the hardest during the virus crash. So this is all of my positions right here. And you can pause the video and look at the symbol and then the number of shares I own. That should give you all the information you need to determine my position. If you're really interested in the account tab, this is it. 121 cash options. It's a little bit inaccurate, of course, because of my options position screw everything down, but you can get a general idea. This is my highest return positions. This is the equity by equity position, etc. I own a lot of PCY now, which is emerging market bonds, and they're actually already up $148, and they will be giving me about a $50 dividend per month. So I'm looking forward to that. Okay, well that's enough of this. We're going to talk about free money and how the hell do you get free money from Robinhood? Well, it's not really that free, of course. First of all, you need some collateral. It's basically a high chance yield, a high percent yield that you can get through options plays. And then not only do you get that yield, but unlike other debt instruments, you don't get it at the end. Once you get your collateral back, you get that yield right up front. So you can do whatever you want with that money. You can gamble with it, you can invest it, you can just keep it in your account, you can do whatever you want. All right, so the way you do it is by exploiting highly improbable scenarios. So what do I mean by highly improbable scenarios? Well, huge crashes in the stock market, and especially in specific names. So for today's example, I'm going to use Amazon. Okay? So Amazon, this is the chart of Amazon right now after the crash. It's especially good to do this after a big crash like this, maybe even a bigger crash after a correction, because you're going to get more money for more bang for your buck, okay? So it's even going to be a better deal tomorrow because it's down 1.5% after market. So what you do is you pick an unlikely scenario. So you click on trade Amazon options. You go to the furthest out date that you can. In this case, is June 17, 2022, which is 2 years from now. And you pick a very improbable scenario, which is Amazon dropping all the way down to, let's say, 2100. Okay, look how far down I'm going. I mean, this is really unlikely, right? It's 3,300 right now, actually less than that, I think, tomorrow. And it's going to be really unlikely that in 2 years, okay, this stock is going to be at 2,100. I mean, that's like almost halving, okay, almost half the price in 2 years. It's not going to happen. Very unlikely. I give it like 1% or 2% chance of happening. Could happen, not very likely. So you sell a put, but in order to have collateral for that, that's going to be an enormous amount of dough, okay? So what you're going to do is you're going to buy another put that's just under it at the 2000 mark. All right? You're going to continue. You're going to press the number of contracts. Just click 1. And it says right here, minimum credit of $2,555. Okay? Once you click preview order, it's going to give you the collateral you're going to need in order to receive that credit, which is going to be $10,000. Let me see if you can see this on your screen. Okay, yes, you can. Yes, we can. So you're going to receive $2,555, and you're going to need to put away $10,000. So if you have $10,000, you can do this exact maneuver. Now, the cool part about this is that even though you're locking $10,000, you get to receive the credit. You get to receive your reward of $2,555 right away. And of course, you're going to have to play with the limit orders here. You're going to have to, work the trade, but we're just speaking in principle here. Okay, this is a rough estimation. So normally and by the way, in 2 years, this is equal out to about, 12.5% per annum, which is a huge percent. I mean, right now, if you put $10,000 in a savings account, even if a high yield savings account or like a CD or something like that, you're lucky if you can get 1%. Like really, actually, you're lucky if you can get 1%, 1% on your money, and that's way below inflation, right? But if you do this and you bet on this high unlikely scenario, you're taking the risk of losing this collateral, but the scenario is extremely unlikely, right? And so you can treat it as like a debt instrument, and so you're rewarded 25% for those 2 years. And unlike I mentioned other debt instruments, you will receive that money at the end. But in this case, you get it up front. You get the reward up front. So now you can use these $2,500 to do whatever you want. I mean, if you want, you can buy a bunch of option calls. It's free money, right? It's free money, so you can take a bunch of risk with that. You can buy option calls. You can just buy stock. You can buy some bonds and collect some marginal interest rate on that money for those 2 years. You see what I'm saying? You can take that money out and spend it. Okay? It's just free money. It's your money, right? Which is kind of enticing to do, and I've been thinking about taking this risk. It's hard for me to like justify it mentally. It makes sense mathematically. All right? Especially if you take a very solid company that it's not going to go that far down in value. It's hard for me to like justify it in my mind, but it mathematically totally makes sense. And I might actually pull the trigger and do this trick and see what I can do with that extra cash. I mean, 25, you can like double or triple or quadruple your money or you have a chance to do it if you decide to put that extra money into options, right? Call options. You can buy, I don't think you can buy Amazon call options that are very attractive near the money, but you can buy out of the money Amazon call options. And we can even look at what kind of deals they have here, right? Let's go shopping, eh? So let's cancel this trade here. We'll go Amazon again, and then trade options. We'll pull out the farthest date. Maybe we can buy some leaps for June 17, 2020. Strike price like 3,000. So let's see, what can we buy for $2,500? I don't think we can buy much. Yeah, I don't think so. Yeah, it's gonna cost us a lot of money, but we can buy some Apple calls, right? This is too much. So maybe we can go Apple. Trade options, buy calls, pick a leap, which is further date, long-term asset appreciation here. And let's say we're trying to go, here we go, a 140 strike. Boom, one option. There we go, max cost $2,400 exactly. So we can buy a $140 call option for Apple 2 years out. And the chance of that increasing, right, of Apple going over 100, over 140 is actually very good. So we could potentially like double, triple, quadruple our money. Or like I said, you can just invest it. I mean, the options are endless, right? There are as many options to use that $2,500 as there are for using regular $2,500, right? You can do anything with it. So anyway, just gonna make this short video. I just want to put that out there as a possibility for all y'all. I'm thinking of seriously considering doing it. I know that's a lot of firms do it. Okay, a lot of investment firms do this kind of stuff, and you know they risk blowing up their entire balance sheets because of plays like this, but they make money right out of it. So, and one other thing that big institutional firms will do sometimes is they'll use that money as collateral, right? They earn money as collateral to layer up more option plays on top of that. So it becomes this kind of like complicated structure that is just a money earning machine as long as the stocks don't go below a specific number. So bear markets are really bad for these firms and for these kinds of strategies, especially really deep bear markets, and you're really kind of betting on there not being a quote unquote black swan event that really takes valuations super low. But if you go to a specialist, but anyway you look at it, Amazon going down to 2,100 again in 2 years is very, very minimal. So, and you're relying on that chance in order to get 12.5% per year return, which is very massive. And then once that's done, you can just keep rolling that $10,000 into other instruments like that. Well, I hope this has been helpful. I don't know if anyone's going to take advantage of this. Of course, this is not financial advice, okay? Even though it's possible to make money like this, this is not advice. I'm not a professional. Of course, I'm just a YouTuber. And if you're confused about any of this stuff, or even if you're not confused, before entering into any trades or any kind of option plays like this, you should consult a professional. And of course, there's risk of losing all that $10,000 if things go against you. Just I want to emphasize that. There is a risk out there, even though personally I think it's minimal. The risk is there. And because it's an option structure like this, it's not like when you sell a single put, you get to receive the equity at the end of the expiration date. You actually could wipe out your entire collateral altogether. So you just got to be aware of that. But I'd be interested to see if anybody actually does this, and if anyone's actually been making money with this method. And I want you to share your experience with me, so I know that what am I getting into, because I haven't actually tried it in person. I've known of this strategy for some time now, but I haven't actually pulled the trigger on it because it just there's some kind of internal like emotional hurdle that I need to get through, and just make sure that I get a feel for the risk. So anyway, I'm going on too long. The strategy is very simple, and I'm just curious if anyone's ever tried it and what they think of it. All right, I'm going to end this video right there. Hopefully you're all making more money than I am. Should be pretty easy since I'm down like $10,000 in the last day or two. So should be pretty easy to make more money than me at this point. I'm going to end it right there, right? Till next time, probably make another video on Monday. Peace out.